Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 29th COT report in 2015, and as usual we're going to start off with the changes in commercials position. So here we go. Sugar is on top of our list with a 54% change in commercials positions. We've got 44% change in large speculators and 36% in small speculators. So huge changes this week. They are actually one of the largest changes in the past 52-week range. Of course, it is a bullish COT change signal coming after a bearish one. You can see the effectiveness of the bearish signal. We've seen a little drop in prices, and of course, we are expecting the bullish change signal to affect prices as well. You can see the last major bullish COT change signal pushing prices higher. So it's, I think, a good sign that prices may go up a little bit in the near future. Now let's have a look at the extreme. Here we go. You can see that we've moved away from bullish extreme levels, but in the past couple of months or even more than a year and a half, you can see that we had these bullish extremes, and prices did go a bit higher, but these rallies were never long lasting. So the downtrend is unquestionable, and of course we're still waiting for a major bottom to happen. Let's move on and have a look at live cattle, where we have an 18% change in commercials positions. You can see the change size over here being larger than average, but if you look at the chart, we do see such changes pretty often. The last time was actually last week, and without any reaction from price. So we may need to be a little bit careful here with this bullish change signal. The extreme shows us a relatively bullish extreme. We haven't had this kind of extreme for 94 reports. You can see it over here. So it's more of a larger change, but extreme. But on this 5-year chart, you can see that to really reach all-time or close to all-time levels, you need commercials to be net long, large speculators net short, and that's not the case now. So I would say be cautious with any sudden trade to the upside. This extreme may easily widen even more before we see higher prices. Corn, our next market, with 16% change in commercials positions. This is a bearish COT change signal, of course. We had similar changes in the past few weeks with prices going down. If we open the 5-year chart, we should see that the rally we had was not surprising. We had a bullish extreme not long ago, and now we're rapidly going down to bearish extreme levels. You may see the last one over here. We've already passed that level, which was able to push prices lower. Now, of course, last week was a down week in corn, and we may say that this bearish extreme is already taking its effect, and we may see even lower prices in the upcoming few days or even weeks. Moving on to large speculators COT extreme, we've got Mexican peso with all-time COT extreme, both in commercials and large speculators. So New Zealand dollar, that has gone away, but let's look at Mexican peso, where we still have this all-time extreme. Prices are deep in low territories, and of course, not surprisingly, we have this huge bullish COT extreme. So we're still waiting for a change in the trend. We are expecting a rise. You can see how well these bullish COT extremes managed to signal us bottoms in Mexican peso, and we're expecting that to happen again. Oats, our next market, with 267 report extreme. Let's open the 5-year chart. Here we go. You may see that this is actually a very large extreme. On this 5-year chart, we can't see when we had that extreme the last time. Commercials are at 332 report extreme, even greater extreme. Of course, it is a bullish one, and similarly to the Mexican peso, we're still waiting for it to take its action on price. Of course, these all-time all-time or even larger extremes may be present in the market for quite some time before we see any reaction from price. But nevertheless, we are at a good point in time, and I think it's a market to have your eyes on. Soybean meal, our next market, and last one for the review. Let's open the 5-year chart. We have 168 report extreme, not only in large speculators but also in commercials. You can see the size of it. It is huge on this 5-year chart. We had this type of extreme back in 2012. We can also see that it had a very short-living effect on price. The rally was able to continue, but it had its effect nevertheless, so it was an effective signal. And I believe this time we are expecting prices to crumble down a little bit, and you may see that already happening in the last 2 weeks. Candlesticks over here that we had declining market. That is all for this review. If you'd like to have if you'd like to have a look at other COT charts, you can do so at our COT charts page. But if you'd like to have a more in-depth and detailed COT analysis, then of course this is the page you should be looking at. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Goodbye.